All right, let's talk about why a company would want to go public. I actually looked into taking my little tiny company public a couple of years ago, and it is a giant headache. So please know that if you want to jump through these hoops, more power to you. So this is the basic synopsis of how a company goes public. First of all, they have to get their financials in order and all their reporting up to date, and they have to employ an investment banker that will cost them many hundreds of thousands, if not millions of dollars. It's going to cost you a lot to get everything in place to get ready to go public. Then you have to get SEC approval. SEC, of course, is the Securities Exchange Commission. You have to get approval from them, and then you choose your stock exchange. And so the New York Stock Exchange, the NASDAQ, you choose your stock exchange. And then what happens is I used to think that companies would just say, okay, on the day of their IPO, their initial public offering, okay, come buy my stock, everyone public, come buy my stock. That's not actually how it works. What they do is they go on a roadshow then, and they go meet with all these big investment banks. So they meet with Fidelity and Merrill Lynch, and they sit down with them and they say, how many stocks do you want to buy? And maybe the Fidelity buys, 500,000 shares, and so they're selling off these big chunks, and they determine what their stock price is by what the valuation of their company is. So let's say the valuation of their company has been determined to be $1 billion. The $1 billion needs to make sense in the amount of stocks they release at their IPO, as well as the stock price that they're going to release as well. So if it's $1 billion valuation, they can say, okay, we're gonna have 1 billion shares, and we're gonna put the IPO price at $1 each. So 1 billion shares times $1 is 1 billion. There's your valuation, right? And so companies get to choose what their stock price is, their initial stock price, and they also get to choose how many shares they want to release in the marketplace. But it needs to kind of be in the ballpark of what their valuation is. Now, this is a really critical number, because what happens if they guess too low? What happens if they say our initial selling price is going to be $1 a share, and it actually is trading for $5, $10 a share? They left so much money on the table. They made $1 per share, and they could have made $10 a share. Are you kidding me? That they left a lot of money on the table. And so what happens if they say, okay, I know our valuation is $1 billion, but we're feeling really confident. We want to come out with a initial price of $10 a share, and no one buys their shares. They have a huge black mark on the company. It's not good at all. And so the reason why companies go public is because when they sell those shares and they go public, they make a lot of cash very instantly. And so on the day of the IPO, what happens is that company owner or founder goes to the bank, and all those shares that were purchased by Merrill Lynch and by Fidelity, instantly, all of that money is in my bank account. And something else happens too. I'm no longer the owner of the company. Now the shareholders are the owner of the company. If the shareholders own the company, do they also control it? No, the control is kind of in two different pieces. The control is in the board. The board essentially represents the shareholders, and represents the shareholders' interest, and they have power to fire or to hire people on the leadership team. So the CEO, the CFO, and the leadership. So if the board doesn't like what the CEO or the CFO are doing, they can replace them. And that's kind of like the balance of power that happens there. But shareholders also can vote by selling their stock and saying, I no longer believe in the vision of this company. How a business owner makes money from an IPO is I probably own a significant portion of those shares. And then I can then sell those shares, and I can make money off of the sale of the shares. So that's kind of the reasoning and how-to of how a company goes public in very basic terms.